Hi everyone, and welcome to this beginner's guide to investing. If you want to grow your money over time, investing is one of the most effective ways to do so. But with so many different options out there, where should you start? What are the best places to invest your money? In this video, we will answer these questions and more. Why should you invest? When you invest your money, you are essentially buying a small piece of a company or asset with the hope that it will grow in value over time. This can be a great way to make passive income and build wealth over time. What is the impact of inflation on savings? Inflation is the rate at which prices increase over time. This means that the purchasing power of your money decreases over time. For example, if you have $1,000 today, you won't be able to buy as much with that $1,000 10 years from now. That's why it's important to invest your money so that it grows at a rate that's faster than inflation. Otherwise, you could end up losing money in the long run. What is the power of compound interest? Compound interest is the interest you earn on your investments. When you invest your money, you'll receive a percentage return on your investment. This return is known as the interest rate. The longer you keep your money invested, the more compound interest you'll earn. This can be a powerful force for building wealth over time. Set financial goals. Before you start investing, it's important to set some financial goals. This will help you determine how much money you need to invest and what type of investments you should make. There are 3 types of goals: short-term, medium-term, and long-term. Short-term goals are those that you want to achieve within the next few years. Medium-term goals are those that you want to achieve within the next 5 to 10 years.
No.
And long-term goals are those that you want to achieve in more than 10 years. Your goals will affect the type of investments you make. For example, if you have a short-term goal of buying a car in the next few years, you may not want to invest in stocks because they are more volatile. Instead, you may want to invest in bonds, which are less risky. Where can you invest your money? There are a variety of places you can invest your money, each with its own level of risk and potential return. Here are a few examples: stocks, mutual funds, ETFs, bonds, and real estate. Stocks are a type of investment that represents ownership in a company. When you buy a stock, you're essentially buying a small piece of that company. Stocks can be a great way to build wealth over time, but they are also higher risk than other types of investments. This is because the price of a stock can fluctuate wildly in a short period of time. Mutual funds and ETFs are types of investments that allow you to invest in a variety of securities. These can include stocks, bonds, commodities, and other types of investments. Mutual funds and ETFs are a good option for investors who want to diversify their portfolio. Without having to manage a bunch of different investments, bonds are a type of debt investment. When you buy a bond, you're essentially lending money to a company or government. In return, you'll receive regular interest payments. Bonds are generally less risky than stocks, but they also tend to have lower returns. Real estate is another option for investors. When you invest in real estate, you're investing in property. You can rent out the property to others, or you can sell it for a profit. Real estate can be a great way to generate passive income, but it does require a lot of upfront capital. Index funds are a type of mutual fund or ETF that tracks a specific market index. They're often considered to be low cost and provide broad market exposure. How to get started with investing? If you're new to investing, don't worry. It's actually pretty simple to get started. First, decide how much money you want to invest. You don't have to invest a lot of money to start seeing results. Even investing small amounts of money consistently can add up over time. Next, choose an investment platform. There are a number of different platforms available. Some popular ones include Charles Schwab, Vanguard, and Fidelity. Once you've chosen a platform, open an account and fund it with the money you want to invest. Finally, start investing. You can begin by investing in index funds or ETFs. Then slowly branch out into other types of investments as you become more comfortable with the process. Diversification and risk management. Diversification is the key to managing risk when it comes to investing. By spreading your investments across different asset classes, industries, and geographies, you can reduce the impact of any one investment performing poorly. This can help you stay calm and focused on your long-term goals, even when the markets are volatile. It's also important to understand your risk tolerance, which is the amount of risk you're comfortable taking. This will help you determine how much of your portfolio should be allocated to different types of investments. Generally, a well-diversified portfolio should be able to handle whatever market conditions come its way. Common mistakes to avoid. One of the biggest mistakes beginners make is trying to time the market. This is the idea that you can predict when the market will go up or down and make big profits. But the truth is, no one can predict the market with accuracy. Another mistake is not diversifying enough. This can leave you vulnerable to the ups and downs of a single stock or industry. Finally, investing without clear goals is a recipe for disaster. You need to know what you're investing for before you start investing. Otherwise, you may end up making decisions that don't align with your financial objectives. Actionable tips. Now that you know the basics of investing, here are some actionable tips to get you started. Begin with a small amount. Don't feel like you need to invest all of your money right away. You can start small and let your investments grow over time. Stay consistent. The key to success in investing is consistency. Invest regularly and stay focused on your long-term goals. Reinvest your dividends. Most investments pay out dividends, which are essentially rewards for being an investor. You can choose to reinvest these dividends or take them as cash. Reinvesting your dividends is a great way to compound your returns over time. Conclusion. Now that you know the basics of investing, it's time to take action. Don't wait any longer to start growing your wealth. Even small investments made today can make a big difference in your financial future. Thanks for watching. If you enjoyed this video, please like and subscribe. We would love to hear from you in the comments below. Do you have any questions about investing? Let us know, and we'll do our best to answer them.